Good morning, traders and investors. Welcome to Pre-Market Prep, where you get everything you guys need to get your trading day started. Are you guys excited for another round? I got Dennis Dick back. I know you guys are excited to hear that. We got Walmart to talk about. It looks like even though they guided down, it's pretty up from that point. We'll take a look at Walmart, Home Depot. We'll talk about, of course, the 13 Fs coming out, Warren Buffett. We might even touch a little bit on some others. We got the Gates Foundation, Disney talk yesterday by Dan Loeb, Third Point. A lot to talk about in today's action. And of course, July housing starts and permits will be out at 8:30. We'll keep an eye on that. And welcome to Pre-Market Prep. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, let's bring in the guys. Joel Elconin, Dennis Dick. Welcome back.
New
Dennis.
Intro. I saw Mitch in that intro.
No, I wouldn't really say new, but refurnished. Let's say that.
You know what, though?
Money, Mitch.
No one's in Detroit.
You're in Detroit. Don't worry. Just say that you're in Detroit. Don't worry, Joel. You're in downtown Detroit.
Joel is in Detroit. You're in Detroit. You're in Detroit.
You're our Detroit, our local guy.
I'm kind of still local Detroit. Kind of. I'm only 5 hours away.
Yeah, you just gotta throw across the pond there.
Really far now. Like,
Yeah,
you
you
know,
have
need,
it.
like, your real.
Well, welcome back, Triple D. I'm just going to call you Atlas Van Line's mover, but we'll get in that in a second. What a day in the market yesterday, crossing into the 4,300 handle for the first time since May 4th. Couldn't close above it. I'm going to show first. Mitch is going to ask me to share my charts, so I'm going to share my charts. But this is like a quad top up here that we got to topple at this 4305 area. I got to make it just a little bit bigger. I mean, look at that. 1, 2, 3, 4, 5. We stopped there. Stopped where we're supposed to. We pulled back, but man, oh man, if we get above there, I mean, are we going to be talking about 4,400 going into the quad witch? We'll find out.
No.
All right.
They can't stop it. Right now,
can't.
it's full FOMO. I sold early. Shouldn't have sold early, obviously. This is why I didn't go short. I'll tell you that much. But holy, wrong. Selling early. Was selling, about 80 handles ago after the CPI, 420. So keeps going. I don't know where it tops out, but all I know is stocks are starting to look like 20 times and going into a recession. We've said this story before. Lots of potential concerns out there, but we're full on climbing the wall of worry. People think they've missed the boat. People think we're going back to all-time highs. People are buying everything risk on. And again, you see it, especially these meme stocks. It wasn't a 2-day rally. It's turned into a 6 or 7-day rally in some of these meme stocks now. I mean, Bed Bath & Beyond ripping higher here again. So hard to argue with the FOMO. Hard to fight it.
Yeah, I think it's interesting to watch. One thing I'll just kind of state there before we get into Triple B is I am starting to see on Friday we were at 78 RSI. I talked about that. I felt we still had a little bit of room. Now we've gotten towards 86.38 yesterday. I think that is the topping out there.
What's the max? 100? I don't even know. 100?
Yeah, well, it isn't. You could stay at that 100 and you can't go past it. So it's bounded. The biggest thing there is the extremes on the SPY. That's what I've talked about before. That's what I pay attention to on RSI. Do not pay attention to it when it's in the middle. I only pay attention to it when it's at extreme, either overbought or oversold. In this case, there's very rare times where you see the SPY go past that 86. And if you do see it, I would say, and I can look back at the chart to be kind of 100% right, but 9 out of 10 times you're coming down off of those levels, whether it be in a day or two. It could be in a day or two, but I do think that we start coming back here.
Got to be buying pullbacks like on serious pullbacks because it continues to work, at least as a trader. As an investor, when we went to 420, I raised myself up because I thought 420 was going to be the number. I raised myself back up to 47% cash. But as a trader, you're going with the flow, bias long trading because, until we get but once you get that, just be prepared. I mean, we're going to talk Thursday about headline preparation and trying to anticipate stuff. And in some cases, if you're fast, you can wait till the actual headline hits. So keep riding it until you get a rug pull. And there will be another rug pull. I still believe it's going to come from China, but who the hell knows when? It could be a month from now. I thought it would come faster than this, but it could be a while from now. So I think you just got to keep riding it. But as a long-term investor, I'm not buying stocks here. So it depends what hat you've got on, but stocks are not cheap. I mean, I'm going to come in and buy Apple now at 173 near all-time highs, 25 times earnings. I just don't think it adds up. But FOMO is back, and you can't fight the FOMO.
He thinks that I talked to Gene on Friday, and he thinks the earnings are going to increase to justify the price. He thinks they're gonna keep finding new ways to make money. He's got a price target of 250 on it.
Yeah.
And that, whether it's, he talked about EVs, and I don't know. I think you're going up against Tesla and that. I think it's going to be hard for them to catch up. And he talked about, the media and the streaming, and I think it'd be hard to catch up on that. But I think what Apple's working on, I have just no confirmation, is something related to health. Right? They got all the data. They got all the information. If if he could come out with things to, besides diet pills and things like that.
I don't think that's a secret. They have Apple Health. They just need to keep going with that. So,
yes, there's no secret.
But they're coming out with everything. Like they've, they're always building stuff, and and this is why I still have a position in Apple. Obviously, I've hedged it, but and it's up. You own the Qs, you own Apple. Your indirect exposure to Apple is enormous.
No matter
always.
What. Yep.
It's just not a cheap stock anymore. So when it was trading at 10 times earnings 4 years ago, it was a cheap stock. And we kept saying, when is it going to get the love? When is it going to get a market multiple? Now it trades above a market multiple. And now I'm asking, well, when is it going to come back down to a market multiple? So sometimes these things take a long, long time. It took a lot of years for Apple to get the love that it so much deserved. But you're at a point here now, it's given so much love. Relative to the Qs, to JC Peret's chart, Apple's at an all-time high relative to the Qs. So, this stock has been unbelievable. It's been an unbelievable move. In 6 weeks, the better part of 7 weeks, went from 130 to $173. This is a huge move for one of the biggest market caps. It's up 30% in basically a month and a half. A lot of stocks are. So that's the good news. So the bad news is it just runs so far. I just can't see coming into all these stocks now. But maybe we are getting a V bottom. I said if you're buying stocks 420, you're saying we're going to have a V bottom. Apple's looking like a V bottom. So maybe it's going to happen. Maybe we're just going to go back and forget. We aren't going to care that the TINA trade is dead, and the TINA trade right now is officially dead when you can get 4.5% risk-free assets. So maybe we're not going to care, that China's pissed off at the U.S. Maybe we're not going to care about all these things. But at a certain point, maybe we are. So I still think it's prudent to lighten up, but I've been dead wrong for the last 3 or 4 trading sessions for sure.
Well, as long as it's not, as long as you're not out there shorting stuff, it's and you do short-term portfolio. You also took some heat you took some heat on some stuff too, though. Right? And it's come back. So maybe it's a prudent thing to do. That is to lighten up a little bit.
There's been big moves here. This is like if you're, and I just saying, and obviously I had a lot of cash. I wasn't taking as much heat as other people. But if you were in like some of these dogs, like Bed Bath & Beyond, and you ride it from $20 down to $5, and you're at 16. In the summer, the New York Post article, they were turning the air conditioner off to save money. This is a gift from the memesters. It is. I don't know where the party ends, but do I think Bed Bath & Beyond's go to $40, $50, $100, $200? Is it the next, AMC that's taking off? It's possible, but I don't think it is.
Sold it early.
I sold it way early. I'm always early. This is my problem. In 23 years of professional trading, I'm always early. I'm usually early with the call. I'm usually early with the exit. If I could break that, I'd probably make a lot more money. But like I've said before, it's better to be early than late. So I go to a party, I'm early. I get it from my parents. My parents show up early, to everything. So they want to be on time. So maybe that's where I get it from, but I don't know where it ends. I don't know where the Bed Bath & Beyond party ends. It went from $5 to $16 in 2 weeks. It's tripled in 2 weeks. What do you want? I mean, what are you asking for? This is an awesome move. I mean, there's so many other stocks that have really had really, really good moves. And like we just said, Apple, big time. So let's go into the news of the day here, though, because we've already had this conversation. I don't know where the rug pull happens, but I think it eventually does. And that's why I think it's prudent to raise cash. But we continue to climb the wall of worry. So let's go in because we're climbing the wall of worry in 1 million stocks.
All right, let's go towards Walmart. Of course, EPS coming in here at $1.77, down from $1.78 year over year. Sales at $152.9 billion, beating the $150.75 billion estimate. Walmart did maintain their guidance for the back half of fiscal year 23. They said in an inflation pinch, shoppers were buying less high margin products, discretionary merchant like apparel, as they spend for more necessities. And also one thing I think that was interesting is Walmart did say that shoppers are increasingly using credit more than debt, and then more than debit. And Walmart membership-based warehouse club, Sam's Club memberships hit an all-time high.
So we get a warning from them literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 trading days ago. We get a warning from them. The stock gap's down, and that was basically the bottom in a lot of stocks. And now everything's good. Everything looks good again here. Just all happy. We're all going back to normal. Recession is over. It's buy stocks. That's what market's telling you anyway. So I know the market always prices in everything, and it's efficient and it knows everything. So I don't know, it's going up. But I have a position on, so I'm not going to talk stock specifically. I have a position on Walmart. I have it hedged versus Costco versus TJX. There's a bunch of retail stocks too. So the hedge is working perfectly because I'm almost the exact same amount of money I'm up today. It's just an overnight position. So I always do these exotic hedging. It's not really that exotic when you're Costco versus Walmart, but
sometimes it's out of necessity, and sometimes it's out of sometimes it's out of intention. I don't know what to say. The company comes out, gives you bad news on a couple of other occasions. Obviously, the street did not fall for it at all. I mean, they came right back down to 120, brought it right back up, filled the gap. They came down out with some corporate news. Boom. I would just say, keep an eye on the pre-market high, whatever that is at the point. Maybe, some paper's going to have to stack up somewhere. As far as technically, you are absolutely in no man's land. You are trading right here. You got the gap up there. You're gapping into a gap. Use your short-term technicals. The only thing, and I don't have that information right now, is the pre-market high. And you're going to have to find some really aggressive buyers. I know there's 2 million shares have traded, but you're going to have to find a lot of people to pay up 4% on Walmart after what you've rallied, $16, $17. But this is the way the market is, and pre-market high 138.62. We'll see. That's all I can give you. Gapping into a gap, and it's helping everybody else, right? Target's moving up.
Entire retail sector.
Yep, entire retail sector. They took down the entire retail sector, and now they're bringing it back up. So there's your key indicator.
I mean, even Amazon, and you got the Qs trading down. Amazon's up $1.25 on this. Some people will say, "Oh, that's because Warren Buffett increased his position," which will be a good segue, but it's not. He didn't increase his position. It's just from the share split. But we'll get to that in a second. I don't know what to say, so I'm just going to leave Walmart. Like I said, I have a small trading position overnight in it, but I had it hedged out, so I'm good there. Let's go to Home Depot.
All right, we can go to Home Depot now. One thing I will state on that Walmart that was interesting for me was the Sam's Club membership hitting the all-time high. Could give us a little bit of insight when we get BJ after the close on Thursday. So keep that in mind. Home Depot EPS coming in here. Let's talk about this. EPS at $5.05, beating the $4.95 estimate. Sales at $43.80 billion, beating the $43.40 billion estimate. Home Depot reaffirmed full year 2022 sales growth and comparable sales growth guidance from approximately 3%.
You can't stop the buy and the dip, Joel. I mean, they're just all over it.
Yeah, I was
dip
just
for more than 5 minutes.
Why would you knock this? I mean, why would you knock this down to what? Almost 300?
Why knock anything down right now? Because you're wrong. Because the stock just bounced right back. I mean, it's I guess there's some stocks that are still not bouncing back right off the earnings reports. But this was a fine earnings report. You knock $10 off it, they're going to come in and buy this. The money manager's like, I got too much cash. Okay, Home Depot's down $8. Let's go buy it. And they come in and they buy it, and it's right back. I mean, that's where we're at. This is why you got to just sit back, look at the big picture. People are wrong. I'm wrong. I have the same thing. I mean, a good company pulls back on a pullback right now on a dip, I'll buy it because you know what? I don't like being as much cash as I am when the market's going up.
I'm just gonna. I see we're traded 312.50. I'm gonna throw out the low. I'm gonna throw out the high, and just I'm gonna focus on the dailies here. And I'm just gonna look at this 315. Yeah, we've traded above it a little bit, so I think the bears are still in control. But I think you get this thing above 315, and I think the complexion of the market changes here. You get above 315, has not come anywhere near a 50% retracement, whereas Apple's probably already passed a 618. The SPOOs are approaching a 618. So cage monster here. I say you get over 315, and I think the bears will be heading for the hills. Hey, Dennis, people want to know the 4.5% risk free.
Yeah, I'm in Canada. I can get GIC for 4.5% here right now, which is guaranteed investment certificate by the government of Canada. Never defaulted before, so it's out there. I don't know where it is in the U.S. I think our rates are slightly ticking a little higher than they are in the U.S., but it's just telling you those GIC rates a year ago were 1.
I know.
0.5. Now they're 4.5. Tina Trade is officially dead. There is lots of alternatives here now. Lots of alternatives to stocks. There was lots of reasons for them to sell off. There's lots of reasons for them to rally because they were oversold. I just think the rally is overdone. That's all I'm saying. Mitch's stats on the RSI is telling me the same thing. That's why I'm ringing the register on everything that I bought. I basically rang the register on everything I bought 6 weeks ago. So, which paid the bills. That's what we got to do. People are saying, oh, you're missing all the fun. Not in this for fun. I'm in this to pay the bills. This is not fun. This is not the casino. This is how I make my living. So I see.
You know what that RSI does though to you sometimes? Like it gets up to these elevated levels and then the market's quiet for a little bit, right? So then it pulls back, right? The market really doesn't go down. It really doesn't go up, but it just kind of like hangs out. So that RSI, slips down to like 70 or 72 and the market really didn't go anywhere. And then and then it rips again. So before I'm looking for a turn here, I'm looking for at least some kind of topping pattern, a double top, and then a wicked point of consolidation. Tim talked yesterday about coming in. We got an options expiration this week, and a lot of times they juice the market into that. We have a quad wedge coming up also in September. We have there's a lot of things out there that can knock us off the keister, but like right now, like the RSI is just like it's not one of the tools.
Remember, one of the things is that's just going to give us the description about when we're in the overbought, not a signal down, right? And so I would agree with Joel's comment there. Look for the pattern, right? Now that we were looking for the pattern to show up to get confirmation. Another thing that was mentioned in the comments also when I talked about that of RSI above 86, a lot of times we're looking for it to get back below 80 to give us a sign that we're actually cracking down. It's not just the first tick down. You're like, yeah, this is it. It's coming down, baby. No, it's not that way. That's not the way it works. Remember,
it's hard to break
description.
It's hard to break momentum. I mean, this is why there's so many successful traders like Christian Fromhertz that are momentum traders that go with the flow. It's hard to break momentum. I'm a contrarian at heart. I try to do it. And I lose probably more often than I do. I probably make more money if I would just be a momentum trader and, not try to call the turns and stuff. But I tell you, when you call the turns, they're very lucrative. So, like where do you pick up? Like on Square, I picked up 35% on Square in 8 trading sessions. I mean, when you go with the flow and the momentum, you don't get those kind of moves. So, it's different. I'm going to lose. It's a tougher game, but it really pays hard when you call it right. So, I mean, if you can call the turns, but to Mitch's point, just because the RSI is 86 doesn't mean it's turning today. Doesn't mean it's turning tomorrow. It just means we're overbought. Stocks stay overbought for a hell of a long time. But to know that, just getting the big picture, we're overbought. So you wait maybe till you get the headline that's going to maybe be the turning point. Sometimes it happens on a quad witch, Joel.
That's a good
options.
point.
Sometimes it happens from a macro headline, which I think it's going to be this time. Maybe you just wait. And I'm always learning as I go too. And maybe that's what I do wrong is I'm so quick. I probably should just wait for the headline. Instead of trying to anticipate that China's going to do something, why not just hold stocks long until they actually do something? Because when they do it, the algos get their initials, but then people buy the dip, and then it's like, oh, this one's for real. And then you sell into that, those dip buyers there. So that's probably the better way to play it. Teaching myself right now is that you want to, in some cases, you can almost wait until the news, until the catalyst, and then look at the move, and then obviously you got to respond fairly quickly. But being prepared is, like they say, there's no such thing as luck, but, luck is where opportunity meets preparation. And I totally believe that.
Dennis, you should sign up for this course on Thursday from noon to 3.
I should. I'm going to learn a lot.
That course? What is
Introduction
that
to swing trading. We're just talking about catalysts here, then we can go back to the earnings. But we had that early expiration in June, right? Because the first Friday was the 3rd, right? So it was actually the 17th, right? June 17th. And look where the market bottomed. Look where the absolute dead low of the move came on the expiration. So maybe you just
that was an option expiration, the dead low on the S&P?
That was a quad witch. It was actually this. Yep.
I never noticed that.
Yep.
They turn on these option expirations. Those are the big turning days, and that's because there's so much volume coming into the markets on those days that you get people positioned, certain ways off of that. So that makes total sense. I didn't even notice that, Joel. Yep, June. We turned right on that day, June 17th.
Yeah. Sometimes people just puke out, like, I just can't take it anymore.
They did. They totally did. I mean, they're all on CNBC back on June 16th. They're like, well, we haven't seen anything like capitulation. The S&P fell from 410 to 360 in 6 trading sessions. In 6 trading sessions, we lost, what the hell is that? 15? We lost 13% in 6 trading sessions. That's a market crash.
That's not capitulation.
I mean, the market crashed at 27 and 87 was 27. We lost 13 in 6 trading sessions. What the hell are you looking for?
I'll bring their side. They were looking for the VIX. They were looking for the VIX over 40.
Don't even look at the VIX. The VIX is stupid.
That's the problem. They were looking at statistics, Dennis, and they were trying to use statistics to call the bottom.
I have no idea where the VIX is.
Where is it? 20? 19?
18? You can guess it. It lags so much, Joel. I could probably guess where the VIX is. Not look at it for a month, but just from my trading, I could guess where the VIX is. Completely. If you're not in the markets and you go to your island and you're coming back in a month and you're trying to get a feel, it's a good idea for getting a feel for what's happened. If you're sitting at your trading desk every day and you don't know where the VIX, like in your head is, you're not trading. I mean, I can tell you right now, I can see from my P&L. I know it's definitely a lot below 30 because of volatility. There's not much going on some days. It's calmed right down. You don't see these vicious whipsaws happening anymore. So, I mean, it all depends who you are, but it's good for the desert island people. But if you're looking as an active trader, you're looking for the VIX for your next trade, it's a lagging indicator. I don't think there's anything there for active traders. Sorry.
All right, now just real quick. Oh, I'm sorry. I just wanted to reiterate because I get levels in my head and I don't back off them. And Print Tom is asking about the resistance here. I mean, I showed it a spider, the S&P. I mean, we are there. This 4305 in the SPOOs is now a quad top. If you go back, I know the spider is a little bit different because of the 24-hour market, but I mean, you don't get more clear resistance than this, right? I mean, right here, this 4,300. So I just wanted to throw in that. Mitch, go ahead, finish up with the earnings, or do we want to go into the 13 Fs?
We're going to go into the 13 Fs. I just wanted to show us a little bit of actual proof, right? I'm talking about this, but might as well show you guys it in a graphical representation here. So here's the SPY here, and I circled all the moments where we've gone above 85.65 here. It's not an exact why it's 85.65, the line that I have drawn there. But what I looked at it is just like kind of like a pattern, right? Where does it peak often, and what are the extremes? Extremes are those quick spikes up, and what happens on those. So if you look here, out of the last 5 times this has happened, only once have we gone up immediately following that. And so in my case, this is why I'm looking for it to kind of reverse. Doesn't need to happen in one day. Just like here, you guys can see here, we actually topped up here towards the peak. We got up for a day or two and then really started coming down. That's what showed us the top in November when we started coming down for this, when it was in the bull market, right? And so that's what I'm going to be watching for. Doesn't give us exact, but if you can see it here, if it's playing out 4 out of the last 5 times, I'm going to go ahead and keep watch of this.
And Mitch, that it looks pretty on the chart. I tell you, it's saying the same thing I am. So, I probably don't need it, but if we're saying the same thing.
Yeah.
So
Definitely,
again,
that's what it's
if
about.
you're not active in the markets, and there's lots of people who are just, got day jobs, it's probably good to look at some of this stuff. I'm just saying, if you're an active trader, you're overbought. You can feel we're overbought. I mean, but it's nice to see it on the chart. It just confirms what I'm thinking. So when you show that, and somebody says prettiest chart of the day, I kind of agree with it. Simple look in, we're overbought. So you're coming in here like, I got to buy something. I'm like, that's what everybody's thinking right now. I've never made a lot of money doing what everybody else is doing. I'll just tell you that much.
All right, let's keep going. Let's get into the 13 Fs now. Let's talk, of course, about Warren Buffett and what did he take some shots on in the second quarter. Let's take a look at some of these charts. Warren Buffett increased Ally Financial, Occidental Petroleum, Activision Blizzard, Paramount Global, McKesson, exited stakes in Verizon, Royalty Pharma, during Q2. Let's go towards the first one that was pretty big, which was Ally Financial. Of course, they do have a big dividend. I need to look it up because this was what interested me in this stock during when they talked about that dividend raise that they had. But let's talk about this. He raised the shares to 30 million shares from around 801,000. So it's like 30x from the previous filing here. Definitely believing in Ally. It's my bank, so I mean I'm with it too. Let's go. Why not? They're interesting in what they provide, and they've also gone a little bit into trading also. So we'll keep watch on here.
You know who is really good at buying the dip too? We give Kathy like us. She's the best buy the dipper, or the most maybe not the best, but the most prominent, where she's buying dips like crazy. I tell you what, Warren Buffett is a dip buyer too, man. Every time Oxy pulls back in the 56, he buys stock. And he hasn't bought it. Oh, why hasn't he bought Oxy for a while? Why then pull back to 56? You can see where he's buying it. I mean, all this ALLY, Joel, where he's buying it. Off the full 32 support. Like he's like taking a page out of the Joel Elconin textbook for technical analysis, and it hits hard support and these big levels that Joel talks about. That 32 would have been like a 5-star level for you, Joel, maybe an 8-star level. And he's backing up the truck. He's backing up the truck there for the last 45 days because always 13 Fs are backward looking, and now it's moving up. So if you're buying ALLY today off of Warren at 38, just remember he was buying at 32, 33. So you're not just can follow Warren perfectly and say, well, Warren, what's good for Warren is good for me. Well, it's good for Warren at 32. At 38, I mean, you're coming back up here now. But people will chase Warren Buffett. And you know what? I think he's the best investor of all time. So I like to chase him to a certain extent here too. But I'm not going to chase him up 7% on ALLY today, knowing that he was buying it probably at $32 or $33.
Well, a couple things here. I think Warren takes more than shots in the market. I think Mitch goes, what's Warren taking shots at? I think they're very thought out, calculated. Also, I'm happy about this because Dana's husband works for Ally, Garrett. So that's good news. Big pop. You can see the consolidation there, gapping into an area. A general comment on these Warren things. Sometimes they just take it. Like you think this is up 267 and you think that's a lot. But sometimes they just take it from the open and they just keep on going. You've seen that with Occidental Petroleum a few times. And then sometimes it's a pretty good fade. I don't have a fade area here because we're gapping into a gap. 39.67 would be the first area I would let if I was long today. I was looking for the rally to continue. So weird chart here. I mean, that's when the market fell out of bed, and now the market's back up here on a relative basis. So maybe the say should be at $42. I don't know, but Ally traded good only on 127,000 shares. Does this trade a lot of volume, Dennis, or not?
That's a lot of volume for ALLY.
Okay.
That does not trade. That's not a heavily traded stock. So it's ripping on this. And we see other stocks ripping on this as well. I didn't trade the ALLY, but I did trade a few of them last night. And I got fooled too. So because I was looking at the 13Fs. And you see, look at the 13F, and this is why, this is a hard thing to program and algorithmically anyways. You look at the 13F and compare, the old holdings and new holdings. That's how they do it. And you look at Amazon, you think, oh my goodness, he bought a hell of a lot of Amazon. And I thought off the bat too, I got fooled with it too. And then I'm like, wait a minute. This had the split. So he actually didn't, and there's multiple news sources that reported that he increased his stake in Amazon. But when you do the quick math, oh no, he didn't. This was just 20-for-1 split. Everybody's silent again.
No, because you gotta, it's I don't know where to say.
I just thought I said it perfectly, and there was no response. It's like, remember Old School? Do you remember that movie Old School?
Rodney Dangerfield.
No, Old School. Will Ferrell. Joel.
Well, what am I thinking of?
He's real old school, Dennis.
I'm thinking of Back to School.
You said old school. He really went old school on you.
Will Ferrell, and he was sitting there, and he's like giving the whole thing, and then the response was like, I have nothing to say. That was absolutely perfect.
Just beautiful there. All right, what about activision increasing on that? What do you think about that position?
Doesn't matter at all for the simple reason. I guess they think he's a risk arb here now. He likes the one thing to consider is that EA and Take-Two have come back a long ways too. Full disclosure, I'm long Take-Two again. I put it back in the long-term portfolio on the dip. I'm the dip like everybody else. So they've come back a bit. I mean, this is like deal or no deal still. It's like, what is it? Like $95 is like the takeout price here. So if it goes through, obviously he feels like it's going to go through, or he thinks that I like the stock even if it doesn't go through. If it doesn't go through, it's going back to the low 70s. But obviously, Warren still likes the risk reward. So I didn't even notice that he had increased the Activision Blizzard position. But again, with the risk arbs, it's not going to move as much as like an ALLY.
Yeah, it climbed about close to 4 million, just a little bit under 4 million shares. So nothing crazy that he added more there, but definitely
the other one was Paramount, which was
Para.
Interesting. This was the other one that I took note of. I did trade it on it last night. I'm out of it now, but I'm looking at this and thinking, you know what, Joel? Paramount here. It's just kind of setting up not bad. Now you get the Warren catalyst where he's increased the position here. This is one that's sneaky, not really going much. I know it's a while, like it can be,
it used to be Viacom or whatever.
Yeah, Paramount. Yeah. This is the old Viacom. Remember this one went to $100 on what was his name? I can't remember his name. The crazy hedge fund manager.
Oh yeah, the capital that went.
Yeah, Wang.
Yeah. Anyways, and then it crashed down and burned. This is interesting.
No more.
It's an interesting setup here because it hasn't really broken out, and you got starting a little breakout yesterday. Now you get the Warren catalyst here. I wouldn't fade this one. I would. I maybe could be talked into fading something like an ALLY. I don't think I'd fade this PAR.
This is too wide open. You did get the spike to 27.40. You got some gaps to fill. Just one quick segue, Dennis. Totally off the subject, but Bobby Kotick he made a donation to the University of Michigan, and now they have an esports degree. They have yeah. So if you've been talking about that for about 5-6 years about the rise of
man, you talk about
I was too early on that
don't matter.
All right, it is 8:35 here. We're going to take a little break here. We're going to bring on our guest, and it's Evan Schnidman, and he is a longtime friend of the show. We haven't had him on in a long time, but I caught up with him yesterday. We had a great conversation. So let's bring Evan in and probably the joke he's heard from me so many times. He's a Harvard guy, so I know he probably couldn't get into Michigan, so he went to Harvard. But Evan, welcome back. Welcome back to the show. It's been quite some time.
Yeah, thanks for having me, Joel. Great to be here.
So first of all, going back, Prattle. That was your first company that you had. A very interesting company, and you sold that to Liquidnet. So just refresh our memory a little bit here. Tell us about what kind of technology was behind Prattle and the sale to Liquidnet.
Yeah, absolutely. So at Prattle, we use natural language processing to analyze market-moving language. So basically started out analyzing central bank communication, so Fed speak, seeing how that's moving the market. They built a mathematic model to essentially track how linguistic patterns tie directly to price action, and then went over and applied that same logic to analyzing corporate communication, so earnings calls, regulatory filings, speeches by corporate officers, press releases, et cetera, and then providing analytics based on not only that individual company's lexicon, but residualizing on a per speaker basis. So how does the CEO speak that's different from the CFO on a given earnings call? And are they out of pattern for themselves relative to each other?
And was PreMarket Prep part of that verbal communication interpretation?
It was not yet. So sorry to say, we were going for primary sources here, so we were looking.
We'll give them a break.
Only at the corporate officers.
All right, so you've moved on to a new venture here, and it's Market Reader, marketreader.com, and price, right? Everyone you see the news. There's this is what Dennis is like an absolute expert in, but he does it with some formula that you can't put on paper. But tell us about Market Reader. You guys are still in your infant stages, but tell us what you're working on, how it's different from Prattle, and what your plans are for it.
Yeah, absolutely. So Market Reader is a totally different animal than what we were doing at Prattle. Really, our focus is on identifying unusual price action during the course of the trading day and explaining that unusual move. So first and foremost, we are targeting retail investors with this. We want the folks who are trading day in and day out using this all day long. So our whole system's built around identifying moves in real time. So within a 10-minute bar, we're identifying, is this truly an unusual move? Is it unusual in terms of volume and in terms of the magnitude of the move? So obviously we're analyzing tick level data, constructing our own 10-minute bars there. But where it gets really exciting is we're actually then running everything through a suite of volume and flow models, factor models, analysis of social media and of news to identify what is the most plausible explanation for what's causing an unusual move. So, you look at this morning, okay, Walmart spiked. Well, okay, it spiked on high volume. Our calendar model fired immediately. We know that's an earning. That's because of earnings.
Yeah.
Well, then there's a bunch of sympathy moves we're seeing across the market, and some of those are being picked up in our factor models, right? And so we can identify in real time not only is this unusual volume, right, which is frankly a pain to look up, and we're also identifying how does this fit into the historical time series for that company, and what's the most plausible driver of it? It might just be a tweet. It might be a news article that got buried somewhere. It might be in one of the news wires. And so we're analyzing all of that in real time and surfacing that information directly to our users. So right now, if you go to marketreader.com, it's pretty much just identifying the unusual volatility. In the coming weeks, we're actually going to be rolling out features providing all of that analysis. We've got those models up and running in our internal beta environment.
Evan, this is so interesting. So do you give an actual reason? Like, does Market Reader actually give the reasons? So obviously you'd say Walmart earnings, you'd say Target sympathy, but you get some, like Bed Bath & Beyond. Do you give it to like Reddit? Like, do you give or somebody, saying something in social media? Do you give the actual reason, or do you just kind of like, as in an overview of it?
Yeah. So we actually, we identify what is the most likely reason.
Most likely.
Right. So we're not saying definitively this is the cause.
Yeah.
We're not going to claim this is causal, but we can say this is a plausible explanation. Here's the news story or set of news stories, and that or the tweet, the single tweet that is most likely an explanation as to what's going on here.
So you'll say the actual user that tweeted the thing, like I actually mentioned who tweeted this.
Oh yeah. We'll identify a link directly to that Twitter handle.
Really cool.
With the news, we're actually working on a suite of natural language generation models to automatically summarize a whole set of articles, because nobody wants to go through and read 24 articles. Like, who has time for that, right?
Yeah.
So you want the one paragraph that tells you why is this thing moving in real time.
This is something that I should be I should be one of your customers here, because I'm going around trying to find this information. It'd save me some time. I'm like, okay, what's going on with this stock? We asked the Benzinga news desk, and then they're looking, and we're looking, and everybody's trying to figure out what's happening here. Just go.
It's the problem. It's the problem we all face. Anybody who's trading the market actively day in and day out, we all face this problem. It's a pain to keep up with this, and so we've been going through and building a system at scale to surface that information in real time.
I ask that question probably 20 times a day, even to other traders in our firm. What's going on with this? What's this stock? I mean, we all know what's going on with Walmart, but it's like, just randomness moving. It's like, what's happening here? Who upgraded this that we don't know about yet?
Exactly.
No. It's. I mean, we found an example a few weeks ago from a mid cap biotech stock that was selling off one of their drugs in development. Had a volume move that was like 13x their usual volume for the day in a 10-minute window. And we're going, okay, what's going on here? And it got picked up on Twitter half an hour before it got picked up in the news that they were selling off one of their drugs. And then 6 hours later, a Cowen analyst downgraded the stock because they were selling off a promising drug. And so we're able to track all of that in real time, and then actually pull up the time series and say, here you go. Here's an individual chart that'll show you exactly what was the tweet, what was the news article, what was going on in that moment, what models were firing throughout the course of the trading day.
Very cool.
So is this running 24/7? I mean, because you do have, obviously, the futures markets is a little bit more difficult. Is this something that you have running on a 24/7 basis? And doesn't incorporate? I mean, futures is hard because there, a lot of different things can affect it. But just wondered how the when it was running, and like on a weekend. Like if I go to a weekend, is I going to see anything on this?
Yeah. So it's running 24/7, 365. Really, the objective here in the long run, our intent is to cover global equities, commodities, currencies, crypto, options, futures, everything. Right now, we're covering the U.S. equities, some crypto, and some currencies. We'll be adding in quite a bit more crypto over the coming weeks and months. But really, you're absolutely right to point out, the futures market is a little bit wonky to be showing. But we want to have global coverage, and that means real-time analysis with no downtime. The crypto market's open 24/7. Futures markets are trading. We want to make sure we're providing that analysis, providing that information to our users all day, every day.
All right, so I want to come in here and ask about. I did see that you guys also track Wall Street Bets mentions and kind of mentions like that. I think it's interesting, definitely, to find out if your stock is being followed by Wall Street Bets. So tell us a little bit about some extra data that is followed here.
Yeah, absolutely. That's through a partnership we've got with QuiverQuant, and so they're identifying what's being mentioned on Wall Street Bets, and we're able to then surface that information. So you probably saw the Walmart example this morning. So I think it was the fifth most mentioned company on Wall Street Bets. So there you go. Our system identified that, and then obviously explained why there's unusual volatility in Walmart this morning. And so really our goal is to track the things that retail investors care about, right? People who are trading the markets day in and day out are paying attention to what's being mentioned in Wall Street Bets. So if you go to our Twitter feed, Market Reader Bot, we're programmatically tweeting out that information. And some of those things are mentioned on Wall Street Bets, and we're flagging that in those tweets in real time as well.
How do you decipher through the Wall Street Bets? And I don't want you to give your secret sauce up here, but just I've went on the Wall Street Bets a few times, especially back when the memester stocks were just all flying and everything was going crazy. And I'm like, they're talking about every single stock on the face of the earth here. I'm like, how do you decipher through it all to come up with the one or two that are going to move off of Wall Street Bets mentions?
Yeah, so we're not making a value judgment about what we think is going to move. We're just we're just using the Quiver Quant data on quantity of mentions and flagging that if there's unusual volatility in a company that we're picking up exogenous from Wall Street Bets, we're picking up unusual volatility. We're then reference checking: is there any are there mentions that are being picked up in that Quiver Quant data that tracks Wall Street Bets? And if there are, we flag that. So that our users can know, hey, this is being talked about over on Wall Street Bets, and there's unusual volatility, because those two things coinciding, it matters. It matters if you're gonna trade that position.
For sure.
Let me ask you, what level of sophistication do you need to be at in your investing and trading to make use of your product?
Honestly, anybody who's trading their own portfolio can use it. Obviously, look, we're all active traders here. Like, having data that updates every 10 minutes matters if you're trading throughout the course of the trading day. But the reality of it is, if you're a more passive investor who only looks at your positions every month or every quarter, you still want to know why is some stock in my portfolio moving, right? And to use that Walmart example again this morning, right? If you've got Walmart in your portfolio, or for that matter, if you've got Target or Lowe's or Home Depot, all of which are moving this morning, right? You need to know why those things are moving if they're sitting there in your portfolio or on your watch list, regardless of your time horizon. So we've been working on on a modification of our system that gives people information on what we're referring to as day to moment. So from the start of that trading day to that very moment. So it's a little bit of a longer time horizon than the 10-minute windows that we've been looking at. But over time, really our expectation is any level of sophistication. And anybody from the most technical traders who are moving very quickly on an intraday basis to the more passive investor who's in their portfolio once or twice a quarter. They ask this question: why is X, Y, or Z in my portfolio moving? And it's a pain to find that answer right now. And we're surfacing that in real time with a variety of models running in concert with one another.
It's so much harder than it used to be, because I've been in this business 23 years, and it used to be able to find the reason why my stock was moving within seconds, even without social. And people say it's always easier. You can go on Twitter, you can find stuff, but there's just so many different places to look now. It used to just be, somebody's talking about it on CNBC. If it's not in the news and somebody's talking about it on CNBC, it was like one of 3 or 4 things. And now it's like, no, it's some dude that's got a following on Twitter, and he just gave an opinion on this stock, and his opinion carries weight because he's got 100,000 followers. I mean, it's like so much to follow, so it's tricky.
Well, and honestly, even some of the micro caps or small caps, you only need a couple thousand people following that stock to really move price,
right?
And so it's a matter of tracking that. In the long term, our ambition is to cover more social media beyond just Twitter. Really be able to dig down into, is there somebody with a big Reddit following that's talking about this particular security, right? Is there, is this trade coming up a bunch in a Discord chat, right? Like there are things like that ultimately these are all trackable. It's just a matter of you have to collate the information and make it discoverable in one system.
Do you have like 400 programmers? I mean, like how do you, like, I know you got your PhD. I mean, to me, like how big is your company? How do you get all this information and put it together in a timely fashion with it being correct?
I'm very fortunate. I have a small but very, very talented team. My co-founders Jens Nordvig and Webb Bigol are both absolutely masters at what they do. Jens is an eminent macro analyst, and Webb's been building technology systems for retail traders for the last 10, 15 years here. And so we're really, really good at what we do. And there are only 9 of us. We're a small team still, but no, we're actually, we've built out our technology systems to ingest this information in real time and analyze it as quickly as possible, because it's just not possible to do this with human beings. It would be cost prohibitive.
We've been on the line with Evan Schnidman. He's the original founder of Prattle and the co-founder at Market Reader. And Evan, I have a feeling you're going to be back on this show real soon. I really appreciate it. Great information. This is what we're trying to do in real time too. We try to take all the information that's thrown at us, and you're finding a way to do it mechanically. So thanks a lot, Evan, and we'll be talking to you again soon.
Yeah, thank you guys. Appreciate it. Have a good one.
All right, let's keep on going there. It was interesting to hear from that. And I like how they also take a look at the sectors. Like Joel said, literally what we do, just doing it in a mechanical sense.
Mechanical way. All right, we're leaking on Triple D. Maybe
little
that
leak.
that
I should ask
RSI
Evan, what's going on?
indicator. It's the RSI. I should have known.
We should have asked Evan what was going on. He could have looked right at the system right now and tell us why the S&P just lost 5 points.
We're going no. All right.
I mean, okay, so you're coming into retail earnings season here, folks. Walmart's obviously a driver of the bus here for retail stocks today. Most of them are going to be higher. Yes, you can argue with me that while Home Depot is going the other way, but Walmart is still the driver. Walmart's always the driver. You've got a lot of other companies. Target's going to report tomorrow. Lowe's going to report tomorrow. You're going to get Kohl's. You're going to hear from like the Ross stores, Estee Lauder, Deere later in the week. So you're in the heart. You're coming into what we like to call retail earnings season. So what is the catalyst here? Is always the question. For every day. Like the first thing when I'm coming in and start my morning day, I'm like, what's the driver? Today was going to be Walmart to a certain extent because there wasn't a lot on the earnings calendar. Home Depot is there, yes, but Walmart just carries so much more weight with so many more investors. You got a small company, C Limited, obviously, that reported here as well. So it's moving, but it's Walmart as a driver. I can't tell you the reason why we just lost 5 points, but I can tell you when you're gaining 50 points over the course of a week or over the course of a couple of days, losing 5 points might just be natural volatility.
Yeah, I mean, we've had, we've just had a tremendous run in the market, and I know we go on different, sides of the markets, and you guys are anticipating, when things are going with Pelosi and China, and I just tried to okay, I'm not going to make an investment decision, based on that, and I'm not going to make any investment, decisions based on the RSI, but I am going to be hawking that high from yesterday. I am going to be hawking this 4,300. And this is I just can't express what a critical level is when you have a rally, you faked everyone okay, 50%, that's got to be it. We're going to hit the 50%. And I think Mark Chaikin talks about this. Sometimes you go to the 0.618 and I try not to complicate my technical analysis, but I bet you we could be right there right now. So, I mean, we got a level. We have the best level to lean on as far as potential. Let me put a capital P there, potential resistance than we've had since the June bottom.
The chat's talking. Chat's ahead, man. I tell you, there's some lagging indicators. Our chat is often a leading indicator. Our chat is awesome. And they're talking, obviously, FOMC minutes tomorrow. It's funny. Somebody typed FOMO minutes. And I was like, what did that mean?
I don't think that was a mistake.
FOMO minutes?
I don't think there's a mistake.
There's a website for you, the FOMO minutes. And we just created $1 million website for somebody. Go into the FOMO minutes. It'll tell you all the media style. It'll tell you all the memester stocks that are going. The Bed Bath & Beyond is going. Here's the FOMO minutes. Look, we create stuff here, man. Somebody just grabbed the URL, probably FOMO minutes.
Go, Daddy.
Yeah, I just stole that and got a raise for that, so appreciate you in the chat.
I just stole some. I just gave somebody $1 million idea again.
Thanks for the idea. I'll take the raise. I'll take you out to dinner.
Just started to say FOMO minutes. I like that. That's good.
Now, one area that I did catch in the 13 Fs that was interesting, and you can look at different ones, right? One that's been in the news lately a lot is Elliott Investment Management. Elliott started a stake in Pinterest, but shed Twitter. So Pinterest, let's take a quick look.
I wonder, I mean, did he sell into that decline? Did he sell into the decline in Twitter? I don't know. I don't know if that was a good exit.
I don't know if that was the best time to exit.
He's been on this pins. I mean, I'm not going to fight him. You usually get these initial pops. It doesn't look like people are falling for it this time, though. It usually pops and fades. I mean, you got the clear line in the sand here, just around the $24 area. I'm not saying it can't go higher, but give me a couple closes over 24, and I'll look for the next monthly high.
Also, the Gates Foundation turning to autos with Vroom and Carvana. Thought that was interesting.
Is Bill a market mover? I mean, do we put him in that market mover category, Dennis? I don't think you're trading off.
Who is this?
Bill Gates?
No.
Nah.
For Billbot, I don't care. Billbot. Zero cred to Bill Gates found
I mean,
I was wondering why Carvana went up. I mean,
it's going down now. Yeah, no. So who
Yeah.
else
It's still
followed?
high.
I
It's
mean,
still
this is
pretty
stuff
high.
we're going to talk about on Thursday too, like a little more detail. But right now, you got to know what Elliott's doing for sure. They're moving.
He's
south.
hot. He's
You
hot.
always got to know what Berkshire's
What
doing.
about-
There's no mover off the 13S bigger than Berkshire Hathaway. You know, Dan Loeb you can look at.
Yeah, that's what I was going to bring up right
you
now.
can look at Icon. What's Uncle Carl doing? I think Uncle
Nothing.
Carl well, he actually took a position. I had it written down
And
too.
Bosch
I didn't
and
write down.
Loam?
Yeah,
Or-
Bosch and Loam.
Yeah.
Which,
Bosch
what
and
the heck?
Loam.
They change the symbol on that every other week. What's the
I don't
symbol
even
on
know
that
the
thing now?
BLCO is what I have.
BLCO. They change the symbol on that every other week. So he took a stake in Bosch Loam. It was trading up slightly.
I don't
on
even
it
know what
last
this
night.
does.
What was
but-
the original? What was this? Remember, this was like a $300 stock, Dennis. It was a pharma a long time ago,
What
back when
stock?
we had Skrelly on the show. This thing had, I think Ackman got caught in it. Help me out, chat. You're such a great chat. Help me out on this one. What did that used to be? You'll know it. Okay.
What stock? Who's? What are you talking? Who?
I
Which
think
actor?
Ackman got caught in this one. It was like a 280.
Well, Herbalife.
No, what? No, it wasn't
The Herbalife.
It wasn't
The Herbalife saga.
No, this wasn't the Herbalife. Valiant. Thank you, Jason
Valiant.
Phillips.
There you go.
Yeah.
Valiant
You
became
got a couple people.
BHC, right?
Yes.
Valiant became BHC, Bosch Health Companies, which is different than Bosch and Lomb. And then BHC has had just a world of trouble here for
How?
a while here now.
Yeah, that chart
obviously,
does not
looking
look
back
pretty.
at this, 2015, this was a $260 stock.
That's
I'm not
it.
sure if they spun something off or if that's just natural fall, but $6 here now. This was a Kramer darling here too. This was one of his bad picks. He had some good ones, but this was a bad one. I don't know. This stock's been in a world of trouble, but it's beat up. I mean, you're buying not too far from all-time lows on BHC.
All right, let's start wrapping up. What are the levels to watch, Joel, today? Are there any levels that you can give us? Overall market here.
You guys you've been paying any attention here? I mean, come on. You got the closing high of the move, right? At 98 and a quarter. And then I actually have 6 stars on 43.0550. That was your April 26th, your April 28th high. 05 was your May 4th high, Monday's high. So that might even be a 6-star there. So got to get green. Got to take out that level. If not, I don't know what your RSI is saying or your SIR or your ISR, but we're at resistance. On the downside here, always I look at the pre-market low, and there's not much under that. There's not much under that pre-market low. So they're your numbers. Easier to give you resistance on a day like this than support.
We'll see
Take
what
your
happens.
time. 2 minutes.
2 minutes? Okay.
2 minutes, take your time. Go.
Well,
go,
I wanted
go.
to wrap up the event here, talk, but yeah, we could do a little. We could sneak a ticker in there.
One ticker, at least one ticker.
All right. What do you got? Well, let's just do Disney. Martin was asking about it. It did get the lift yesterday.
Yeah,
we talked a
I
little
sold
bit
part
about
of the
that.
position here. Wow, what a move. I mean, this has been an incredible run for
What do you
Disney.
do now, Dennis? You hold on?
I think if you have it on for a trade, you ring the register. I have it on for a long-term investment, so I've got to hold some of it. 130 is a target. That was a hard level. I thought 120, but 130 was a big level too. So I got to think, you've come this far, 130 would be my target if I had this on for a trade. It's had an incredible run. Everybody said, I was wrong about this for a long time, and sometimes the market just bails you out on your wrong calls, which it absolutely did. I'm glad I bought more. I wish I would have bought more in the 90s. Everybody said it was going to 60 when it was going to 90. It wasn't. It was Disney. This isn't like, some startup, Mickey Mouse firm. I got the
there you
which
go.
it absolutely is. I think 130 is a likely target.
What
for
do you
this
think
thing.
about the
Obviously, still have a
ESPN?
piece of it.
ESPN talk.
Did you see the
I
news
could care
yesterday?
less about ESPN. This ESPN is not their bread and butter anymore. So the parks, Disney Plus, it's mainly the parks that still run this business. The parks are killing it. The parks are not going. One thing to consider though, if we go into a recession, the park revenue could go down. But Disney Plus, they're still figuring that out. They're going straight to Disney Plus on some movies and stuff. I think it's still going to be a huge moneymaker. And like I've said before, I think Disney is going to be a huge player in the metaverse. You can go buy Meta, and you can go buy, bet on, but don't bet against Disney in the metaverse. There's going to be some awesome, 10 years from now, be sitting in your living room. You're throwing on your, I don't know if it's going to be Oculus or something else. You'll be going on these Disney rides from your Disney Plus, like literally metaverse Disney. Here you go. Disney Plus becomes like the metaverse theme park here. You want to go to Disney World? We got the metaverse theme park running right through Disney Plus. So you feel like you're in these rides. That's going to happen. So you want metaverse play? It is Disney. It is going to be a huge.
How are you going to go to Blizzard Beach and go
They'll
down
have
that huge water slide? Are they going to have little water bottles coming out of the TV?
They use like, what was the thing I watched? It was on CNBC, and they had something where you put it on the headset, and it uses air pressure, like little air pressure comes out of it to stimulate your skin to make you think like you're wet. It's unbelievable. So they're like little things that they can do. So you want to go to Blizzard Beach? There'll be like little air pressure, like, and you'll have a simulation that you feel like you're getting wet.
It's coming. You see these kids that I play with on the show.
I just came up with everything for them. Hire me, Disney. Take me off the show. Hire me for all your ideas. I just reinvented your whole entire firm.
No technical week. I just real quick, and then I'm gonna get out of here. No technical weakness. I wrote this up after the gap and go. I think it was on Fridays, the pre-market prep stock of the day, and I said, you know what? Just put your stock, below that gap, and just keep moving it up. And if it starts to, if the market starts to roll over or starts to get some downgrades, then you get taken out on some downside momentum. As far as daily level goes, I can't get 127 out of my head today. So keep an eye on that. There's not an exact level there, but there's two highs that split it. So Triple D, I'll let you finish up, and I'll check in with you guys later on. Great show today. Thanks, Mitch.
Have a good one, Joel. All right, Joel's getting on out of here. He's going to Pre-Market Prep Plus, but don't miss it. Of course, the Intro to Swing Trading event coming on Thursday, $99, and get your discount, PMPP10. Don't miss it. Go to premarketprep.com on August 18th. 3 hours of education. Joel Elconin, Dennis Dick, Rob Friesen, and maybe a little dancing. Who knows? You don't miss it, guys. Don't miss it. You guys want to go ahead and check it out.
Special guest, the Bushwhackers. It's
the Bushwhackers, of course, baby. You can't miss that. I mean, come on.
I'm telling you, I'm going to put together a pile more stuff here. I'm working hard the next 2 days again, still working on my presentations. I'm going to have all kinds of new material, talking all kinds of different
swing relationships.
But I specialize in the 24-hour trade. But, obviously we're going to talk some of that too. But we're going to be talking, these positions where, you've got a catalyst that makes the turn happen, talking these market turns, like how I was able to identify, the bottom with ARKK, which I called 10 minutes after it happened. Go to my Twitter account on May the 12th. I felt like it was capitulation. It was capitulation. It was the low. Call that 10 minutes after it happened. So what am I using to do that? I'm using a little bit of my head, but how am I coming up with that kind of stuff? Sometimes you're wrong, in anything you're wrong, but, you don't see books on identifying turns and stuff. People, you can use RSI, it's going to turn, but we're trying to get it more, to a science here. So we're going to be coming up with a bunch of stuff here. Obviously going to be 12 to 3 on Thursday. So join us, please.
Yeah, definitely. One of the things that I would say is, you can use an indicator, and you guys see me using indicators all the time, but there's something that comes with the process of thinking with that indicator that I think is more important even, and that's what Dennis will be really talking about, how to look at the market environment, how to kind of assess that before going into the swing trade, which definitely helps you. If you understand environment, you understand rotation, then you can definitely catch a lot of great swing trades and catch the turn. Let's take a look at that trailer for the swing trading event. And like I mentioned in the chat there, I will go ahead and put up the discount code. Check it on out, the Intro to Swing Trading from Pre-Market Prep.
Are you tired of being sucked into momentum stocks just as the momentum turns the other way? Do you not have a big enough account or tired of the complexity for options trading? Well, join Pre-Market Prep's Introduction to Swing Trading. This is going to get me fired up. Learn event-driven trading, seasonality, sympathy trading, and you can stay on top with optimal hedging strategies. So welcome back, Spencer Israel, from his market hiatus, and learn along with Tim as he hones his trading and investing skills. August 18th, 12 p.m. Eastern to 3 p.m. Eastern. You think you learn a lot every day listening to Pre-Market Prep? Learn how to become an investor that can survive the swings, ups and downs in this volatile environment.
Don't miss it, team. I'll see you guys there on Thursday. Let's go ahead. Let's dive on into it. Welcome to, now we're going to get into live trading. So come on over. We'll go ahead and get into live trading action. I think Lord Ryan is out, but I should have Zunaid. I'm ready to dive into this market. Let's see if we get a turnaround or not. I'll see you guys a little bit later, of course, on At the Close. If you guys watch Pre-Market Prep, but for somehow don't watch At the Close, what are you doing? You're missing out on the Close show with Joel Elconin. Come on over. That's at 3:30 p.m. Eastern every single day. I'll see you guys on Benzinga. Up next, we guys got some live trading action.